standing there. So, folks, over to you guys.
Nimesh is
okay, Nimesh is also there. I can see him there. Hi, guys. Good morning. Over to all of you. Hi, we've got Ashish Chauhan also from BSC with us, just joining in. And we're all geared up for the D-Day. We're at the National Stock Exchange to decode the market mood. And the market has been resilient, right? 12.5%, 13% on the index so far this year. The mid-caps have rallied close to about 22, 23%. Is this going to be a historic budget where we're going to go for growth, not just for this year, not for the next 5 years, but maybe till 2020, 2047, when India celebrates 100 years of independence?
So again, I think it's going to be a big day for us, a big budget. In fact, Mr. Prime Minister already said that he's setting a tone for 2047. So, Rhythm, first to you, quickly, what's your big take or expectation from this budget?
See, I think the interim budget has already informed us that the government's focus is on macro stability. So somewhere between 5 to 5.1%, the fiscal deficit, I think that's the most important number that will get reaffirmed. Fortunately, the government has got some more revenues in the meanwhile, so I think most of it will go into more capital spending. So that I think it will be the theme of the budget.
You're saying government should not raise more capital because where they're going to spend, right?
See, that's the point is that we're getting good compliance on taxes, both direct as well as indirect. So the government is now having a problem of plenty, which is a lot of revenues coming through, and therefore expenditures will need to expand in the context of what is, I think, going to be a very important year for fiscal consolidation. I'll emphasize here that the primary balance will come around 1.5%. And therefore, in a couple of years from now, we will be in primary deficit will be 1.5. And that will make India the only country in the top 15 economies in the world with a primary balance. So we are going to have a very, very strong government balance sheet in the ensuing 3-4 years.
We've got Ashish Chauhan also with us. Ashish, all set for the big day, geared up. This is the 7th budget for Nirmala Sitharaman. It's a record in itself. So do you expect this budget to set records? And what would be your key asks, top 3?
For me, it has to be a growth-oriented budget. And broadly speaking, once the infrastructure and growth are taken care of, everything else kind of falls in place, including job creation and other things.
What about this entire pivot towards consumption? Nilesh, do you expect this budget to be very tilted towards consumption to an extent which could break the rhythm of the balance being too populist?
So this budget has to be achieving trinity of impossible. One, go on the path of fiscal prudence, which will eventually result into rating upgrade of India. As Rhythm mentioned, we'll have primary surplus. We'll have fiscal prudence, fiscal consolidation. Second, we have to continue investment in infrastructure. Last year, we came close to 10 lakh crore. Vote on account was 11,000 crore. This budget could probably increase it further. And since there is plenty of resources, we should also focus on creating inclusive growth. So trinity of impossible, fiscal prudence, investment and consumption boost, all is possible in this budget. This budget has to be like Surya Kumar Yadav's catch in the T20 final. Do impossible thing.
The impossible made possible this time.
Well, let's get in Prashant Jain as well into the conversation. Hi, sir. What are the expectations? Expectations are running sky high. And I think the warning out there is don't tinker with these long-term, short-term capital gains tax. But first, let's get to your expectations.
No, I think stability in taxation would certainly be welcome, and I think we look forward to continued thrust on infra spending. And I think otherwise we are all set. I think the outlook is great, and as Rhythm and Nimish said, I think it's going to be a good budget. I don't think it should be a letdown.
Okay, all right, and I think Shireen as well is joining in. She's got a couple of questions as well for our guest. Shireen, take it away.
Well, thanks very much, guys. It looks wonderful to see you all. I wish we were there with you at the National Stock Exchange ringing the budget bell. But thank you to Prashant, to Nilesh, Ashish and Rhythm for joining us at the NSE. But, my question to each one of you, and Rhythm, I'll start by asking you, as you pointed out, it seems clear that the direction as far as fiscal consolidation is concerned that has been set, that glide path will be maintained and there will be continuity not just in the fiscal arithmetic but also broadly in terms of policy. Now, let's talk about politics, Rhythm. And this is the first budget of a truly coalition government where the BJP does not enjoy majority, and hence it's giving rise to speculation on whether this is going to be much more tilted towards welfareism, much more tilted towards populism, giveaways, and so on and so forth. I'll start with you, Rhythm. How do you see the political complexion impacting, if in any way, this budget?
Not really, Shireen. If that had to happen, it would have already happened. If you look at all the Prime Minister and the Cabinet announcements since June 4th, they have not been populist. They didn't increase the minimum support prices beyond inflation. In fact, the rate of increase was less than last year. The instinct was to actually do housing for poor, not to redistribute cash. When he was in Mumbai, he announced seminal infrastructure projects, not a redistribution of money. So I don't think the instinct of this government or the Prime Minister is to actually redistribute in a very large way. Redistribution is inflationary. It contradicts the government's emphasis to reduce inflation. Inflation is the primary source for poverty. So if you bring inflation back, you bring poverty back. So I don't think you'll see much in terms of populism. In fact, I dare say absolutely very little or almost nothing of populism in this budget.
Very little or nothing. That's Nilesh's Rhythm's call. Nilesh, let me ask you the same question. Would you concur with what we just heard there from Rhythm, or do you believe that the finance minister is going to have to find some elbow room to accommodate some of these interests?
So far the vote on account as well as announcements post-elections which has come has shown government's focus on creating infrastructure and enabling growth. And they haven't really focused on distribution of freebies. But I think distribution of freebies versus providing consumption support at the bottom of pyramid or rural India is not exclusive. For example, should there be more asset creation through Manrega? And for that, if we have to give some support in terms of money, I think it's worth doing. So the focus of the budget will still be on inclusive growth, not by giving fish to a person, but by teaching them how to fish.
Right. Prashant, I want you to come in on that. If that is in fact the way that the government approaches its political priorities as well as its fiscal priorities, what would you expect? I mean, there's a lot of expectation of sweeteners on the tax front for the salaried class. There's a lot of expectation that perhaps to aid consumption, especially rural consumption, that there could be a higher installment as part of PM Kisan and so on and so forth. On balance, as we get ready for the finance minister to reveal the fine print, what would your guess be? What would your best bet be?
I think, Shireen, this government has displayed fiscal prudence right throughout. And I think, as Nilesh said, the interim budget or announcement post that don't suggest any of that. I mean, I think consumption is weak because of it has grown ahead of the economy and consumer leverage is running quite high. And the key to solving that, as Rhythm and Nilesh emphasized, is to increase incomes. And in any case, I feel if there are some steps to be taken, mainly they should be taken at a state-specific level. I mean, there could be some tweaking here or there on center also, but I think there is enough fiscal room not to disturb the fiscal consolidation path.
Well, speaking of disturbance or the possibility of disturbance, and again, my question to each one of you, including to Ashish as well, but Rhythm, I'll start by asking you, what we've heard over the weekend, the commentary coming in from the RBI governor, the commentary coming in from the SEBI chief, and then the commentary coming in yesterday from the chief economic advisor specific to the surge in F&O volumes. The expectation is that perhaps there could be some ways of tempering, of checking the kind of move that we are seeing. Would you expect the budget to move forward on that? Rhythm, I'll start with you.
No, Shireen, unlikely in the budget. It's not a matter of the budget. If at all, that will be SEBI that will be looking at it. I don't expect anything today on F&O.
Nilesh, any expectations or you agree with Rhythm?
Well, I think I'll agree with Rhythm, Shireen, because he very nicely explained that, right now there is no need for more money in the hands of the hands of the government. So I guess, what Rhythm was saying, it would be an important budget, but not too much from a market perspective. So hope so. Fingers crossed that, there is nothing big negative, so to speak, as far as markets are concerned. I think Nilesh wants to add a word. 1 second. Yeah, Nilesh.
See, Shireen, my recommendation is treat F&O as a tobacco. Tax it so heavily so that you get money and people who want to trade in F&O pays the price. An equity arbitrage fund is the perfect example. The tax collection to the government is 51% based on our data for last year. Last 3 years average is 56%. You get tax at 56%. Investor is happily complying. It's a win-win situation for everyone. So treat F&O like a tobacco.
I think Shireen, Nilesh has got used to now giving us a lot of headlines. Amar Akbar Anthony, now tobacco. So I think we should get him quite often to give us headlines, right? So hope so. I think, as I said, let's hope that the budget gives no negative surprise.
And not to forget, this budget will achieve the impossible trinity and make it possible, right?
Absolutely, yeah.
So that's something that we'll be watching out.
Well, I think we'll continue with this conversation, but for the time being, we're just moments away, actually, a few seconds away from the opening bell. So I request Ashish to please come. Just 20 seconds to go.
Eight,
7, 6, 5, 4, 3, 2, 1.
Well, that is the budget day bell. Markets have opened, and it's over to you guys in the studio to give us the early rates.
All right, okay, the early rates are that it's a 0.25% high on the Nifty. So it started up with a bang, and that, I guess, was expected. We did see the US markets giving us a nice bump up. So early morning rates are expectedly about 0.25% higher, 24,576 as I speak. And the big gainers for the moment, cement companies. Ultratech is up 1.3, HDFC Life 1%, Grasim, JSW Steel. So basically, smokestack stocks.
I mean, a lot of news-related stocks also coming up on your screen. Look at Federal Bank, right? That the announcement of the new CEO, Mr. Manian, finally, that announcement coming through. We reported it first here at CNBC. 3% higher on Federal Bank, right at the word go. Coforge is starting about 2.5%, 3% higher after numbers. Although there was, I think, a bit of a margin disappointment, but Coforge is starting up. You got Shakti Pumps. We heard from, I think, Deepan in the morning, right? 5%. I mean, clockwork. But it's done phenomenally well. Suzlon is the top volume traded gainer across the board on the NSE. It's got about 5% gains right now. Railtel is coming up with 2.25%. I mean, you got a spattering of some of these names. I'm not sure how much of this is.
Railtel got an order.
They had an order post-market hours. Oberoi Realty is up 2.5%. So a lot of news-related action straight off. Torrent Power is up about 3.5%. There is, HOEC, Adani Power, some of the other names. NCC is starting with about a 3% pop, right? I mean, we'll watch if that package for Andhra comes through. So I think there'll be that expectation as well right now. On the downside, you essentially have MRPL, which is starting with a 4% cut, but that's the only one. And there is a Cyient DLM, which is down about 4%. Look out for these market intermediary stocks, especially on the broking side. After all that we've heard on taxation, Angel One is starting about 1.5% lower. It's already corrected quite a bit from 3,500 plus to just about 2,100 right now.
By the way, good opening, right? I mean, the mid-cap index is now up almost 300 points. I don't remember recently when the market had such a strong opening or pre the budget announcement. But so far, so good. The advanced decline ratio is almost at 1,400 stocks. Look at that. HUL, by the way, comes out with numbers today. It's sitting at a fresh 52-week high as we speak. It's at this 2750 mark, which is a fresh high there. Federal Bank, by the way, is at a fresh 52-week high as well. It's already given a 30% gain this year. And as we know, it's gotten the RBI nod to appoint KV Subramaniam as the MD and CEO. So that's the big talking point this morning. And a couple of these rural-focused stocks, right? Godrej Consumer, PI Industries, HUL, all sitting at fresh highs, perhaps in anticipation of something coming out for the rural market. So good opening for the market. Let's see how it goes. But Nilesh Shah has also been sitting here with us. Nilesh, this is a budget. It seems like it's a budget for everyone, right? They have a lot of funds, access to make all the right noises. But what are the top 3 things that you would be expecting this time? And can it really move the needle of the market?
I'm not sure that can move the needle of the market, but it will surely set the tone, the direction for not just the next 1 year, but maybe for the next 3 to 5 years in terms of what's the government's thinking, especially when this government is so advantageously placed in terms of revenues that they have, that there's so much that can be done, and how they allocate these revenues is going to be the key. And so clearly the pet themes of the government have been the focus on infrastructure. It has been essentially giving a boost, spending more, focusing more on the investment side of the economy. And I see that as a big continuity going forward.
Okay, I want to unplug from the budget for a moment because the big gainer is Federal Bank now 5.96% higher. 3%, 6 rupees higher, doing extremely well. Now, I remember one of the first stocks I covered at a rally like this was UTI Bank. When PJ Naik was appointed, UTI Bank had gone through absolute shit. It was like, suspended from trading and stuff like that. But PJ Naik, it went from like higher to high just after that announcement. 15 days of the stock going through the roof. Leadership can do magic. Your views on Federal Bank?
No, absolutely, Lata. Leadership can do magic, especially for a services industry like banking. I clearly believe that leadership can do a lot. We own Federal Bank. We've been owning it for more than a year now. I've had essentially the honor of working with Manian. And believe me, he's a seasoned banker. He's a go-getter. He's a performer. And I think it's a wonderful platform for him to really build on from what Shyam has spent the last several years in terms of resurrecting Federal Bank. So to that extent, I think it's probably the best of all worlds right now for Federal Bank. A strong foundation and a strong leader now.
Okay, Nilesh, I'm going to come back to you, but let me go across to the other Nilesh as well, who's there. Gentlemen, Nilesh, Rhythm, Ashish, Prashant, thank you very much for joining us. Prashant this side. Nilesh, if I can just come to you, if you can hear me. You said you compared F&O taxation and tobacco taxation. The question is, do people quit smoking because of taxation? It's debatable, right? Will people quit F&O because of taxation? Just a question in jest, but it's a question worth pondering.
I didn't compare F&O taxation with tobacco. I compared F&O with tobacco addiction. Now, one, we need to educate people that smoking is injurious to your health. SEBI is already putting warning signal that ordinary 9 out of 10 investors lose money. So there is one part is education. The second part is that if despite education you want to trade in F&O, then pay a fair share of tax. And which is what equity arbitrage fund are doing. 51% collection in last 1 year, 56% in last 3 years. What more can government need?
Okay. Well, Nilesh, what's your, I'm now asking Nilesh of Envision. Nilesh Shah, thanks. What is your sense? If F&O alone is, treated as business income or speculative income, which is what is the buzz, what happens?
No, I'm sure it's even currently treated. F&O income is treated as a business income. Okay. I'm not sure if essentially taxing it higher is going to be a silver bullet. Like what Prashant said, if people anyway are not making money in F&O, if that's essentially what the reports are suggesting, how does taxing it higher in any way help? Number one. Number two, I think kind of curbing that activity beyond a point will essentially impact the liquidity of the markets. I mean, if we want institutional capital, we want institutional investors to essentially hedge their positions and all of that kind of stuff. I'm not quite sure how this is going to really help. So I'm not sure if that's the remedy.
You think?
Yeah, I'm not sure if that's the remedy. I think what markets first need is liquidity. I think, and if any kind of excessive steps, it may just impact liquidity of the markets and may, in a way, not create a very conducive environment for institutional investors and the big investors. So I clearly believe probably the remedy lies elsewhere.
Yep.
Okay, all right. We got that, and we've gone on quite a bit with regard to this taxation. So I want to put a couple of questions to Rhythm. Rhythm, with budget in focus, and we have this debate about how the PSUs, some of them are very overvalued and on a PE basis, and the multiples are gone out of whack. But do you think it's a good time for the government to take advantage of it? Come in there and throw in some paper, sell some stakes in some of these companies, and raise some money, given the kind of valuations that some of these companies are trading at?
Yeah, that's always possible. And maybe it's also part of the budget. But really, the government has a problem of plenty.
Yeah.
So revenue collection probably is not the key thing here. We have to see how the government is allocating what it already has in its bucket, because really, if it chose, it could consolidate the fiscal deficit even further.
Yes.
But that will be detrimental to growth in the near term. So I think the key is really how they spend. There may be some piecemeal divestment targets, but I don't think that's critical to this budget.
But do you think that maybe converting some of this equity, into maybe state-of-the-art infrastructure, spend more on capital, that could be a possibility? As you said, problem of plenty, capitalize on the situation, raise some money from the equity market, and in fact, pursue goals.
The problem remains the same, which is the execution capacity of the government. So I can keep raising revenues, but if I don't have the execution capacity, what will eventually happen is that the government's cash balance at the RBI will keep rising, and we will have a liquidity crunch.
Okay.
So I think that balance needs to be there. So I'm not against the idea of selling some overvalued stocks, but I think the key is whether we can
what we do with the money that
use for that money and execute it to build infrastructure. Now, of course, this government's track record is incredibly good, so they can probably do that. But I think that's the key.
Okay.
Just to put some numbers, the PSU market capitalization now stands at 80 lakh crore. The government ownership is close to about 50 lakh crore, which means if they even divest about 2% of their ownership, they can raise close to about 1 lakh crore. But
I'll give you another statistic, Rima. 3 years ago, that entire market capitalization was 15 lakh crore to 80 lakh crore. Yeah.
Okay. Prashant, budgets usually are a non-event over a period of time. So over the medium term, what is your view on the market? Because history tells us when you invest at these levels, at 21 times forward multiple, so it's not out of whack with long-term averages, you don't make too much money. So what's the medium-term view on the market, and are there positive triggers on the horizon?
No, I would agree with what you said, that this is certainly a time to tone down expectations. I think real growth rates will accelerate, but India is a lower inflation economy, and the big catch-up in profitability of corporates is behind us. So going forward, I think, and their rhythm is a slightly different view, I feel profit growth should be around 12-14%, and multiples are reasonable. So I would expect these markets to deliver low-teen kind of returns over the medium term. And there is a narrative that so much money is coming into the market, so market should do much better. When the supply is also caught up with that demand, so I don't think that argument really holds.
Okay, by the way, folks, just hang on. We are just taking one look at the market now, which is absolutely flat. But one pocket which is doing very well is autos. So M&M, Eicher, Maruti are all your top gainers right now. There is something expected for green mobility for sure this time around. So let's see if that comes through. But gentlemen, morning to all of you sitting there at NSE. Rhythm, I wanted your thoughts on, which sectors you would be backing now. Budget or no budget? I mean, are you expecting infrastructure, capex? There is expectation that a lot could be done for rural consumption as well. What does your pecking order look like in terms of sectors now?
I would agree with Prashant, by the way, that the expected return on the market is low teens. It's not going to be high teens. I think a fair bit of the earnings coming forward has been baked in. With regards to sectors, I think the low-hanging fruit, in my view, is private sector banks, the large ones. They look very attractive, and it doesn't look like the market is priced in the coming earnings cycle in those stocks. I would selectively buy industrials, but very selectively. I think in a lot of places in industrials, valuations look too rich, and there could either be a big correction or there could be a period of consolidation in which investors don't make returns. The third sector, I think, is IT services, where I'm very bullish. I think IT services, like the large private banks, are not pricing in the next cycle, which I think is going to be AI-related spends that will come to their way. And then lastly, I think, again, selectively consumption. I like the auto cycle. I think auto and auto part companies are going to do very well, and it's not fully priced in. And in some part, mass consumption, maybe retail. I think those are the places that we would go to.
Okay, thanks for that, Rhythm. Actually, same question to you as well, Prashant. What have you been buying in the run-up to this day?
I think I would almost entirely agree with what Rhythm said. We are positive on private banks. We are positive on capex selectively, on discretionary consumption, and even on IT. I don't think we can bet against it. The only place additional where I think there is still some room for maybe a marginal re-rating and continued growth is the power utilities, especially in the public sector.
Gentlemen, I want to come back to the three of you. And Nilesh, I'll start by asking you, how should we factor in the narrative that came through from the economic survey, and specifically, the chief economic advisor telling me very clearly that, look, now the baton has to move to the private sector. The private sector has to do now the heavy lifting when it comes to investments. Corporate profitability has quadrupled in the last 3 years, and hiring and compensation haven't kept pace. We've done our bit. The private sector needs to go out and do more. So do you believe that there should be a tempering of expectations, that there will be more PLI schemes, for instance, or there will be more relief to the corporate sector in any form or fashion? How do you read that message coming through from the survey and the economic advisor? And more importantly, how do you see it translating into the budget, if at all?
Shireen, clearly the ingredients for revival of private capex is in place. Low leverage, high capacity utilization, availability of equity financing through market, reasonable availability of credit in the banking system. It's still growing in double digit. What is lacking probably in some sense is animal spirit, and that is where ease of doing business is critical. That's not going to come from the budget. It has to keep on continuously coming in from outside of budget. Second, there is need for PLI scheme for labor-intensive industry. And most importantly, in vote on account, there was announcement of 1 lakh crore fund for investment into futuristic technologies. I think that fund should be utilized through public-private partnership to support those technologies which our entrepreneurs can commercialize. As of today, we are seeing Indian patents filing rising, but we are not yet seeing those patents getting converted into investments. My wife is a doctorate from IIT Mumbai, and I've seen many of their colleagues giving a lot of theses on various things. But are those theses, are those PhD papers getting converted into investments on ground? Answer is no. I just hope and pray that 1 lakh crore vote on account fund announced will bridge the gap and convert investments.
Well, you're right in pointing that out. It's yet to be operationalized. In fact, the principal scientific advisor speaking to us in the run-up to the budget said that discussions are on operationalizing that 1 lakh crore rupee corpus on R&D and innovation. But Rhythm, to you now, to take that question forward, how do you see that reflecting in any form or fashion as far as the budget is concerned? And if I were to ask you in terms of priorities, while the expectation is continuity, the focus on manufacturing and job creation and so on and so forth, are there any new areas that you believe the government may like to focus on, any new ideas that you would watch out for?
Yeah, so Shireen, I think the first and foremost requirement is for the government to step away, which is what it is doing. By reducing the fiscal deficit, by reducing the primary deficit, the government is creating space for the private sector to borrow and spend. And the government's debt to GDP will continue to decline. It has already declined from the peak by 8 points. And in the next few years, it will continue to decline. So that's the first thing, which is that you have to create space. Having created that space, I think you may have to provide for some incentives in certain sectors, which require a little bit of government support. So I think those may come through in this budget. Sectors such as electronics, sectors such as food processing, lab-grown diamonds, maybe even defense, continuing from where we are already. So some of these sectors may receive specific incentives or specific plans from the government to incentivize domestication of manufacturing. The third is that we already have a global setup. China plus one is clearly underway. India has managed to lower its logistics cost quite a lot. The PM Gati Shakti program will lower it even further, and that does make India more competitive. So I do think as a natural course of action, more private capex will take place. The chief economic advisor in the economic survey has already pointed out to a 20% increase year on year in private capital formation. That's a very good number. So let us not actually think that there is no private spending happening on the capital side. It has started, the cycle has started, and I think it will continue to gain momentum over the next 3-4 years.
Well, that certainly is the indication, as he pointed out. It's encouraging, and that's what we're picking up here from industry as well, that in the second half, the expectation is that they will build on the investments that have already started. But Prashant, the same question to you in terms of themes, in terms of any new ideas, any new priorities that you believe the government is likely to go after with this budget. I mean, this is also a budget in many ways that is going to be about legacy. This is Nirmala Sitharaman setting a record. It is going to be her 7th consecutive budget. So any new spaces that you believe this budget is likely to negotiate?
I think, Shireen, I would entirely agree with what Rhythm said. We just need to do more of what we have been doing. And I think private capex is on the way up. But capex is a slightly longer lead item. I mean, between intent, planning and actual execution on the ground, it could take few years. So I think we are moving in the right direction, and I would be very optimistic. And signs are already there. If you look at the order backlogs of companies like ABB, Siemens, they have grown significantly. As far as new areas, I think we need to continue to push. We don't have the ecosystem in electronics. I think that will need a lot of effort, and I think it will take few years before results will come in. But I think we are moving in the right direction.
Okay, all right. Nilesh, I had one question to you. You've given us an example about arbitrage funds in comparison to PF. Suppose in this particular budget, given the backdrop that people are talking about, that the banks are not getting deposits, suppose they go ahead and give some kind of incentive for FDs. Say the taxation is eased out a little bit. Do you think they'll be sending a wrong message? They don't think of the STCG and the LTCG, but giving some kind of, leeway to an FD, will that send the wrong message out?
So again, it's like 5 blind men trying to figure out elephant. Why is bank deposits slowing down? RBI's own data suggests that between FY21 and FY23, 10% of households' financial savings went into currency notes. Are we doing anything to bring that currency notes into the banking deposits? If tax incentive is one way, let's do it. But the most important thing when we are giving tax incentive, we have to ensure that it's given for right reason. Now, generally, people make money, generate above inflation return, real return, by investing in equities and higher yield debentures. Yeah. Bank deposits, insurance, pension fund, small savings, currency notes, they don't produce real return in a significant manner. So we should encourage investors to invest for a longer term in real return generating assets. That's how Indians will become wealthy. 93% of our savings are going in below inflation, negative real return or low real return products. Only 7% goes into high real return products. Do we want our country to be wealthy or not?
Okay, all right. Irrespective of what they do, Nilesh, I'm taking your advice very seriously. I'm in search of the Amars, as well as, putting the money in higher yielding assets, so to call it.
Gentlemen, this has been a great conversation. Thank you very much. We're going to leave you so we can all catch the budget at 11 o'clock. Thank you once again, Prashant, Nilesh, and Rhythm. With that, guys, it's over to you. Back to the studio.
Thank you. Thank you very much, Rima, Nigel, and our guests. Nilesh, thank you very much for your patience. And you tell us, in the last 2 months, what has attracted you?
So I think in the last 2 months, the bank space has got surely more attractive, okay, because the markets have rallied, the banks haven't rallied as much. And we've seen from the recent earnings, the results are pretty okay. I mean, they're in line and obviously there's a potential to grow and they probably seem set to kind of deliver mid-digit kind of growth. So that's one area which is kind of ended up being extremely attractive. I think the tier 2 tech space is looking even more attractive now. And clearly now a lot of investors are realizing that it's time to kind of move away from the large cap IT and still kind of continue to focus on the second level of names. So that's another one area which has kind of turned attractive.
Do you like the autos by any chance? I mean, there's I think I've never liked the auto space.
No, I
right?
still think I'm a big believer yet of auto anchs. Okay. I still believe you remain OEM agnostic. You really don't care whether it's 2-wheelers, 3-wheelers, 4-wheelers, it's EVs, it's ICs, whether it's domestic market, global markets, it's replacement market. I think auto anchs essentially kind of are well poised to continue to deliver to you a very linear kind of a growth. the numbers there are way more predictable versus the OEM side. So I prefer to have the auto hangs. Did own Tata Motors, Mahindra and Mahindra at some point of time, but obviously now post this run up, I have exited in them.
Guys, Lata, you use that phrase. What is the stock which has caught your attention in the run up to the budget? You know what has caught my eye? A stock called MTNL. I mean, it'll come up on your screen. Just look at MTNL in the last 1 month. Actually, the last 7 days, the stock has doubled. I'm not sure if there is anything really happening there, or this the run up in anticipation of something coming through in the budget. I think we were chatting earlier that I think all they have is really land, land holdings in prime locations like Mumbai, etc. Not sure, but that's a big mover. It's got huge volumes as well.
Only 2 cities,
yeah,
Mumbai and Delhi.
Yeah.
So why will their real estate not be precious?
Yeah.
I would respect the screen a lot. If it's trying to tell you that something is coming in terms of, divestment of assets of PSUs or something, it makes eminent sense. And the real estate cycle is in favor of such an action.
Yeah. Nilesh, housing, I want to talk about. You were saying that that's a prime sector through which the government can push consumption lower and etc. What's the best play there in housing? Is it housing finance or actual builders, etc., contractors? What's its?
I still believe housing finance is a better place to be in.
Okay.
I think there's a lot more consistency in terms of their performance, consistency in terms of their growth. And if you essentially can spot the ones which are essentially pretty strong in terms of their underwriting standards and manage their loan books quite well, I think housing finance is a great place to be.
Any picks there? What you like?
What we have been owning for a while now is Home First Financial. I think that's essentially a company which has been growing at about 30%. It's been expanding their ROEs by about 100 basis points. They're well capitalized. I think it's a top-class management team in place. So I think it's been great. Just that, of course, the overhang of some of the PE funds being large shareholders and they wanting to kind of prune their stake once in a while is the overhang. But I think as a business, I think it's an outstanding business.
For this entire consumption, which others have pointed out as well, what's the best levered play? 1 or 2 names, which you think if there is a real concerted effort to boost that lower end?
On the lower end, I still believe majority of the staples market is saturated. I think the big boys, essentially, I think are all in very saturated markets. I don't think any of them have the potential to grow even at high single digit or in double digits. I don't think so. Maybe right now, probably the two-wheeler space has got the growth momentum. For how long, it's hard to say, but at least for the next few quarters, I probably think two-wheelers, if you take that as a proxy for consumption at the lower end, not that a 1 lakh rupee bike is kind of the low end, but nevertheless, that's what it is.
But that's a better way to.
I think it's probably a better way.
I have one question on consumption since Prashant brought it up. Since there's more money that could be in the hands of consumers, both in terms of perhaps bringing the taxes down as well as rural consumption, right? These e-commerce players, whether it is Zomato, whether it is Nykaa, Honasa, even the just pure food delivery, guys, etc. Is this a space where you think that there could be more upside?
I'm not sure how good are these proxies for the rural side. They probably are great proxies for the urban side, the urban middle class, the urban lower middle class. I think they're great proxies, but I still think that these are more kind of aspirational products or services where I think there's anyway going to be good demand. They have the momentum going for them. Tailwinds are very strong. I probably think the runway of growth for maybe the next 5-10 years is still very, very long and very high for these players. So I would still anyway prefer this space irrespective of what really happens with today's budget.
I think Nilesh
the market is showing the first sign of red, very little, but
flattish. On that platform point, you own PB FinTech. I mean, stuff we've discussed earlier, right?
Yeah, that's right.
Like Paytm.
That's right. That's right.
Anything else there?
So yeah, we like all these names. I think there's a great space to be. And Prashant, our big call is that the way you probably owned some of these consumer names 20 years back and they became huge compounding stories, I probably think all these platform companies as a basket probably are great compounding stories maybe for the next 5-10 years.
Okay. Nilesh, thank you very much for being
Pleasure.
with us on a very important day, and we are going to harass you after the budget. For the moment, it's back to Shireen. Shireen has the high and mighty of Ficky with you.
Well, that is right. And I'm going to harass them a little bit more. Lata, we've, of course, been speaking to them over the course of the past week, 10 days in anticipation of the big day. But it's now down to the wire, so to speak. Anisha and Anand Goenka, many thanks for joining us here on CNBC TV 18. Anisha, I'll start with you. I know that there's been a long wish list that's come in from industry, including FICCI, but what's the mood that you go into this budget with in terms of business confidence, in terms of being able to amplify that private investment recovery that the government is betting on, in terms of demand visibility? What's the mood like as you go into the budget?
Shirin, good morning. The mood is fairly positive. We've seen a good economic survey. The economy, for the most part, is in very good shape. The last few budgets have been growth-oriented, focused on capex formation, which is good for long-term from an economic standpoint. And we're starting to see some of the effects of that play out. So I would say the mood is positive as we start today.
Mood is positive. Anand Goenka, how positive and confident are you feeling? And if I were to ask you to give me a sense of the pulse check within the FICCI membership, how many people are now talking about fresh investments, adding capacity, setting up new facilities, etc., in the second half of the year?
No, absolutely. I second that. I think the mood is fairly positive at this point of time. Inflation is under control. The focus on capital investment by the government has been fairly strong, and we hope for that momentum to continue. And I think the key will be to create demand. And as consumption and demand picks up, I think private capital is very ready for investment. Balance sheets are deleveraged, and I think whether it is rural demand, which is beginning to see some positive signs. You just shared that two-wheeler sales are going up. Tractor sales have been generally positive. So rural demand looking positive, as well as with the continued capex cycle, we are fairly positive as well about the future.
Anisha, and I want to pick up on this rural demand theme, because the expectation is that perhaps the budget will want to focus a little bit more as far as the rural economy is concerned. In what shape or form is yet to be revealed. But what would your expectation be, and where do you believe, if at all, more is needed? Where do you believe the government should focus, specifically when we talk about rural economy and generating demand there?
Shirin, we feel that the budget should really focus on inclusive growth. And as a part of that, rural economy is clearly an important component. If you look at the past 4 years, on average, rural has been reasonable. The past couple of years have been weaker. We are starting to see some green shoots now. And from a demand standpoint, it would help to have some level of stimulus in the short term for rural, while focusing on capex formation for the long term as well.
So when you talk about some stimulus, are you talking about asset-creating stimulus measures, for instance, more as far as the PM Awas Yojana is concerned, something that the government is already focused on, the roads program, etc. Is that the kind of stimulus that you would expect, or you would like the government to put forward?
That is in many ways the best kind of stimulus, because the multiplier effect is far greater. And therefore, for us, we would look at more of the same in terms of what the government has done over the past two budgets. Focus on capital formation, focus on that multiplier effect that will end up stimulating demand to some extent in the short term, to a greater extent in the medium term and long term.
Anand, we're seeing visuals there of the finance minister getting ready now to head to parliament with the president at this point in time. But Anand, the message from the government is that, look, almost 8 million, 78.5 lakh jobs need to be created annually, and the private sector needs to do its part in order to stimulate that job creation. Now, what is the sense that you're getting in terms of hiring trends? What about the skills gap? Is that coming in the way of hiring? On balance, what is the expectation, both in terms of net additional hiring, as well as perhaps higher compensation as well in the coming year?
Right. I think the government has ridden out the PLI schemes fairly well. We hope that there could be some more in job creation sectors like textiles and others. So if some of those are introduced, I think certainly that will help job creation. Second is there is a lot of change happening with respect to whether it is green transition change that is happening. That can be a large job creation sector. In the renewable space is one large space. And then again, the larger capital investment spend, which will really promote whether it is laborers, construction companies, new bridges and roads coming up, all of that will also spur investment. On the skills side, yes, there is an issue where there is a shortage of labor on one side and there is unemployment on the other. So I think bridging that gap and getting a longer term vision on how we can link the education policy, skill development, and the needs of corporates will be something which we're very looking forward to.
Anish, I want to come back to you and ask you a question as far as how you are seeing the monsoon pan out. And while there have been deficits being reported across different parts of the country, and this is a concern and a risk factor that the economic survey has also alluded to, how are you reading what's going on with the monsoon at this point in time? How concerned, if at all, is industry with the monsoon?
Shireen, the monsoon is playing out far better than it did last year. And while we do see some deficits in some parts, we will have some ups and downs as we go through these 4 months. But on balance, it seems to be pretty normal. And that would augur well for rural overall and for the farm economy.
Okay, that's good to hear. So it's panning out better than last year. That's the view in from Anish Shah, and he would know a thing or two about how it impacts the rural economy. But Anish, finally, we're just about an hour away now, or less than that, from the announcement. If I were to get you to stick your neck out and tell me what you believe is definitely going to be an announcement that the finance minister is likely to make of the many asks that have been sent to her, the one bet that you're likely to make.
The one bet, Shireen, is going to be higher capex formation, higher than what we saw in the interim budget.
Anand, same question to you. The one thing that you would bet on?
I'd bet on skilling and job creation.
Well, skilling and job creation. The question now is, what will the roadmap be to deliver on that outcome? Are we likely to see more PLI schemes? Are we likely to see employment-linked incentives, which is something that industry is suggesting to the government? Will we see more being done for MSMEs and manufacturing as a whole? Of course, different parts of it, whether it's IT, whether it's the component sector, and so on and so forth. But gentlemen, we will have you back and harass you a little bit more with your take on the fine print as and when the budget is revealed. Thanks very much for joining us with your expectations as we go into the budget. The market at this point in time, not doing very much. It's 50 points lower on the Nifty Bank. The Sensex and the Nifty, the Sensex just about up in positive territory, 20 points higher. Prashant, back to you.
Well, Shireen, this is the definition of going in flat, right? There's, I think, 1.5 point change on the Nifty. So awaiting the budget announcement, the speech to start at 11 o'clock. But a very interesting conversation there from some of the corporate honchos. What we'll do is we will...
So just a minute. What the corporates are saying is something which I think the economic survey was reflecting. You know what Anand Goenka and Anish said, finally, what would you want? Job creation, skilling. And the economic survey said that hereafter we can't have big reforms like GST. Big bang can happen only once in a way. Now it is grunt work. It is nuts and bolts work. Get your education in space. Remove the gap between education and employment. I think that grunt work is what we have to expect. Boring budgets are good budgets.
Are good budgets, and absolutely put your head down and sort of continue to work hard. We'll take a quick commercial break here. Markets are flat, but we come back and we get you the tax picture in some detail. So we'll have Rajiv Dimri from KPMG India and Dinesh Kanabar from Dhruva Advisors, and we put the spotlight on expectations on tax changes, if any, from the union budget. Stay with us.
Speaker, sir, I rise to present the budget for the year 2023, 24, 25.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. Today, she will become the first finance minister in India's history to present 7 consecutive union budgets, surpassing a 5-decade-old record held by the late Morarji Desai.
That budget, following the British tradition, is called vote on account. So no spectacular announcements are made that time. So you may have to wait till after the new government comes in July.
Expectations are running high, especially after the FM ruled out spectacular announcements in the interim budget, holding out hope for some surprises in this full budget.
It is an agri-dependent country to a large extent, and therefore we look forward to some agri-incentives, some incentives associated with food processing sector.
Somebody earning 20 lakhs has to pay 30% tax. Correct. That is too less. So that should be rationalized to a lower level.
Allocation in the for the Ministry of MSCBs has grown, but I feel that it has to go even further because also the credit terms for them is extremely high.
The stock markets are largely hoping for a status quo budget and fear any major changes to taxation.
I think if there's a real rise in capital gains tax, that would hit the market more than what happened after the election.
With the development of capital market, say taxation issue. This taxation is always a big pain point.
Stock markets are at a record high after a blistering rally. But the flight of capital from household savings into riskier assets has both.
Well, we are inching closer to 0 hour. Just 10 seconds ago, when we were in the commercial break, we saw the finance minister and her team entering North Block. So leaving from home, we saw her meeting with the president, and incidentally, oh, there it is, pictures of the FM entering Parliament. So the 0 hour is approaching. Just a word on why she met the president. Under the Indian law, Indian constitution, the president causes the budget to be laid on the table of the House. So while the president has the ability to send back any law, ultimately he or she has the final say on laws and can send it back to the Lok Sabha. The one law she can't send back to the Lok Sabha is the budget, because she causes the budget to be laid. It comes with her approval. That's an excellent design or architecture of the Constitution. Speaking of which, we have to come to the other big architecture of tax. We have with us our guests, Rajiv Dimri, the head of tax, KPMG India, joining us remotely, and Dinesh Kanabar, CEO, Dhruva Advisors, joining us in the studio. Mr. Kanabar and Mr. Dimri, thank you very much indeed for joining us. Mr. Kanabar, lots expected on how they may tackle this, F&O volumes and the equity exuberance. The economic survey only increased our fears and expectations on that score. What is available to the government?
So today, F&O trade, people who do F&O regularly, are taxed as business income. The question is, could the government recategorize that income as speculative income? Now, today for speculative income, there is no special rate of tax, but it is assessed as a separate block, and the losses there can't be set off elsewhere, etc. So first question is, can you put it as a separate block? Second is, can you make that block tax at a higher rate? Absolutely possible. So number two. So if both of these happen, and then the third weapon, as we were discussing very briefly, is whether there can be an increase in the securities transaction tax on F&O trade. And while the impact of it per trade may not be really that significant, it will yield a huge amount of revenues to the government.
Yes.
So that I can see as 3 distinctive blocks which can be used or should be used. Just reminiscing a little bit.
I used to be on the board of National Stock Exchange, and at that point of time, we had inaugurated a training center, and Prime Minister had come down. And this was in the month of November. And while he was inaugurating the training center, he made a point to say, I can't understand Indian market has become a gambling den. And this was about 5 years ago. 5 years ago. So this is the refrain that F&O has gone beyond all limits, has been going on for 5 years. We have now heard the chairman SEBI and everybody else talk about
now it's in the economic survey document. The phrase akin to gambling, so that kind of pretty much lays out the thinking.
So these are the three things which are available. Let's see what happens.
But will it do the job, Mr. Kanabar? Of if the idea is to reduce speculation and the explosion of retail volumes in F&O, will what you're saying is available to the government, if this is done, will it do the job?
Two things. You asked me a question, what's available from the tax side?
Correct.
And I just stopped at that.
No, because regulatory measures from SEBI side is being worked on, lot size increases, strikes, etc. But from a taxation perspective?
From a taxation, these are the only revenues which are available. There is nothing else with that. Government will tax you at a higher rate. So you come back and say that instead of 30%, it will be 40%, whatever rate of tax. And the government can come back and say that whatever losses you make there, you cannot set off, this will be standalone. They could go back and say, and this could be a very radical thing, not something which I would think is desirable. But since you are asking how radical it could be, the government could come back and say, speculative income and speculative loss can't be set off against each other.
You know, there's another concept.
That's an extreme. That's not taxing real income. I'm just responding to a question as to what else it could do.
The point that you made about tax, if they explicitly say this is speculative income and it's charged taxed according to the slab rate, right?
That's right.
Or they can also come and say that this will be
at a flat rate.
At the highest marginal rate. It's
Absolutely.
possible. That is also
absolutely possible, because that's something which is happening. For example, income from race horses, etc., are taxed separately at a highest rate. Same thing could happen for F&O.
So speculation is one aspect of the debate, and we've heard various regulators talk about it. The other part of the debate is whether there is a need to do something to mobilize more bank deposits, which also seems to be a big issue. Let's bring in Mr. Rajiv Dimri, Head of Tax at KPMG India, into the conversation as well. Mr. Dimri, what's your sense? Do respond to what Mr. Kanabar just said in terms of options to curb speculation. The other piece is whether there can be some tax measures that once again incentivize long-term deposits. I mean, right now the exemption is just a very sort of meager 10,000 rupees on the interest income. Would you expect anything else that can make bank deposits, good old-fashioned deposits, more attractive?
So a couple of points. I agree with Dinesh Bhai about the options that are available in tax. I also would extend to say a tax law should be only left to do the taxation and should not become a regulatory law. And therefore, we should not try and regulate a sector through the tax laws. That should happen separately. On the point that you're raising as to how can we incentivize or encourage bank deposits,